If you're looking to day trade volatility, it helps to participate when you see those certain bursts of volatility. A few common examples are the beginning of the morning when the market actually opens, along with the very last few minutes before the market closes. But somewhere in between here, there's one period in which I've noticed that volatility picks up after being muted and is in fact a better time to participate in trades, especially if you're looking to find just 1 or 2 times a day to day trade. That time is none other than the end of the lunchtime hour. That's 10 a.m. Pacific, and oftentimes around 10 a.m. Pacific, you'll find that either side, the buyers or the sellers, after returning back from lunch, kick into full gear in one direction. Now in today's case, I'll show you 5 or 6 different examples. 3 are sectors, and then 1 is the QQQ ETF, and 2 will be normal stocks, so you have a variety of places where you saw something similar happen. Now we'll start first with the industrials ETF here. Take a look at the volatility inside of XLI. We had the sell-off into the morning, breached our aggressive and our conservative volatility box models. We see price start to stabilize. This is in between that lunchtime hour, 9 to 10. And as soon as we hit 10 a.m. Pacific, the end of the lunchtime hour, take a look to see how the buyers step in and actually start to drive momentum in one direction. You can also see that momentum cross with the 3 EMA crossing above the 8. That's what this blue dot represents. So across the board there, we're seeing how the volatility occurred early on in the morning, started to flatten out during the lunchtime hour, a little bit of back and forth. And as soon as that lunchtime hour ends at 10, you can see how that volatility kicks in. So here's a 2-minute chart of XLI, and let's use the same concept to take a look at our next sector, which is XLC. Same idea in XLC. We see the sell-off, we see the little bit of chop back and forth, not as dramatic as XLI, but the chop in the final 30 minutes of that lunchtime hour, and then the hour ends and that volatility picks up. Take a look at XLK, and you should notice something similar here as well, and you can contrast this with the Qs to pick and choose based off of whichever you'd like to participate in this overall tech volatility. If you didn't want an ETF or a specific sector, you could even find stocks where you were seeing this same idea of the volatility increasing with price action breaching our volatility models. This all happens during the lunchtime hour, a little bit of chop, and as soon as that lunchtime hour ends, you can see how that volatility picks right back up with the buyers in this case actually stepping up to the plate. This chop period ends. We take a look at another non-tech example, and you have Caterpillars, same idea. So across the board here, you could use the live scanner to find all of the different places where you had little bursts of volatility throughout the day and use that to take advantage of these moves. Again, just to reiterate the idea, the beginning of the day, the beginning of the trading day, and the end of the trading day, I think most folks know to expect an increase in volatility. It's this middle of the day that I think most folks sort of sleep on this idea, and that 10 a.m. mark is quite magical if you are able to pinpoint some of these trades like we saw in today's case. We had a lot of different examples in today's case. I just chose 6 of them to show you, but for all Volatility Box members, you can go through this list if you'd like to find more examples. You had other ETFs, sector ETFs like XLE, you had Marriott, you had Uber, you had a lot of different stocks to pick and choose from. I hope you found today's video for those of you interested in day trading. I thought this lunchtime hour today was a really nice example of how there's hidden pockets of volatility, or at least predictable volatility throughout the day that you can take advantage of. Not just the beginning and not just the end.